Having another look here at order entry. Now we've seen a lot of examples of when the price has achieved a low. You see here this is the difference in the days here. Here's the separation of the day right here, and we are kind of getting into the height of Asia now at 0 hours GMT, and this is the previous day's low, which occurred late in the day. Now we see price starting to move down and head toward these lows. Less than 50% of the time Asia moves to new levels as established by the previous day. Now if you're going to trade, the idea is to trade while price action is just bouncing around. You see how it bounces around in this range? Now we just may end up in a range here between 85.40 and 85, say 60 or 70 until London opens, when price action starts to pick up. Now you want to trade this right here, right into the bearish candle, because this is a primary reference point and the market is likely to respect that level and bounce here at 85.40. This happens time and time and time again. And in this case we've moved 30 pips, which is a sizable move for Asia, testing these levels and not knowing what the current stimulus in the market is, or what's driving price. Assuming that it's a fairly modest day, we will look at this level to buy, and you want to buy it straight into, and you have to make yourself comfortable buying directly into falling price action, or directly into a bearish, bold-faced bearish candle. Now price slips through a little bit, but as long as price is trading above 85.40, our trade should be good and we should see a bounce here. Sometimes the bounce can happen very quickly. Other times it can happen, it can take a while for it to unfold. Now we've got a key level up here. So we've only got 20 pips to that level, and we've only got 30 pips to the next level of resistance where price could bounce to if it stays in its range before London opens. So we're bouncing here again, and if it continues to hold above this 85.40 level, that's positive for our trade. But now we want to see it move above this level here. Now we need to see it move above here. This is good for our trade. Not much liquidity in the market still, as we're still during the Asian session. But you see how during the Asian session price failed to hold below the previous day's low. Now we're up 20 pips, say 15 to 20 pips on the trade, but you see how it's struggling with these levels right here. It's struggling here. And as price has defined a new range, it would be good to see it hold above this range if possible. Still trading in its ranges. Now look at time. Pretty soon we're about to see London open up. In the meantime, price has moved 25 pips up, and you could have taken some profit here if possible, if you wanted to. Or you can anticipate that this may have been an established low for the day's trading, and we may move another 30, 40, 50 pips in the new direction. Remember, you don't have to know what direction price is going in order to be profitable. You see here, as the Central European session opens and liquidity picks up, and price spikes all the way up to 75. Now watch. This is why you have to take profit. Okay? 40 to 75, 35 pips. Now price moves below our entry order, which was here. Now when you made this entry right here, you could have said to yourself, well, I think price is going to bounce here and it's going to go 30, 40, 50, 80, 100 pips. I think this is a key low. I think the British pound is going up today, so I'm going to buy here. Well, because you had a good order entry right here and the market bounced, filling your first profit levels, then it moved in the opposite to the direction that you thought it would go. That's fine. You still made profit even though the market went against the direction that you thought it would go. And that is good, effective trade management to trade that way. It may have stopped you out for the remainder of your position here. Assuming you had moved your stop up a little bit, you would have been stopped out at a very minimal stop out here. But you still would have made something here with limit orders for profit, because if you're just going to wait and exit at market, you probably would not have taken profit here. But look how it battled right here at this high, which is an important high. And it bounced there, and it bounced and it rejected. Okay? And there you have it.